the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for the day. Well, Singapore shares were lower today as all eyes remained on the escalating conflict in the Middle East. So the Straits Times Index was down 0.42% at 3,914 points at about 2:27 p.m. Singapore time, and that is with a value turnover of some 508 million Sing dollars seen in the broader market. But let's take you through the closing numbers as we shared with you earlier. The STI closed down 0.25%. We're looking at 3,920 points. That's the closing level. In terms of value turnover, that's 905 million Sing dollars. The gainers stroked losers, 212 versus 243. Top advances for today, we've got for you Fuji Offset, Abundante, and Hong Leong Asia. And top decliners, we've got for you Asus, GemLife USD, and DBS. Well, in terms of counters to watch, we have Thakral Corp, because the mainboard-listed company yesterday announced the launch of an IPO of GemLife Communities, an Australian over-50s lifestyle resort operator, and that is to raise up to 750 million Aussie dollars. Now, Thakral Corporation, for context, holds a 31.7% effective interest in GemLife. Now, elsewhere from economists, slashing Singapore's growth forecast to 1.7% for the full year of 2025, to JD.com's founder unveiling this turnaround plan for the company after a 5-year slump. We've got more economic and corporate headlines in focus. And joining me right here in the studio is Kenneth Goh, Director of Private Wealth Management at UOB Kay Hian. Kenneth, welcome to the show.
Thank you very much for having me.
Great to have you. And Kenneth, let's start with Asia this time around, because investors, they seem to have grown increasingly nervous over the possibility of more direct U.S. military involvement in what's going on between Israel and Iran. U.S. President Donald Trump has called for Iran's unconditional surrender, warning U.S. patience was wearing thin. But how has all of this affected Asian markets today?
I think in generally, Asian markets have traded mixed due to rising geopolitical tensions. So the Nikkei 225 has actually traded upwards at about 0.9%. And the HSCEI actually has traded down at about 1.16%. The Kospi actually is up by about 0.74%. So generally speaking, the market is taking a wait-and-see approach regarding these geopolitical factors as well.
If we could go back to the Singapore stock market as usual, Kenneth, how did the STI fare today in relation to regional bourses, and also any surprises when it comes down to the biggest movers and the sectors that they lie in?
Broadly speaking, the big gainers has been Mapletree Logistics Trust, Mapletree Pan Asia Commercial Trust, as well as Singtel. They were up by 1.75% in the case of Mapletree Logistics Trust. Mapletree Pan Asia Commercial Trust was up by 0.82%. Singtel was up by 0.76%, closing at 3.96%. And the biggest losers for the STI has been Wilmer Venture and DFI. Wilmer down by 2.33%. I think generally speaking, the key element here, the ones that have gone up the most, because they're more yield focused, they're defensive plays in the market, especially in, currently where there's a very uncertain macro environment right now. So generally speaking, these names, right, they actually offer stable income through their dividend yield, and they are actually seen as, especially the case of Singtel, they are seen as a defensive blue chip with stable cash flows, and it's a very good dividend play as well.
I see. Well, if we could zoom in on more counters to watch for today, Kenneth, we talked about Thakral Corporation earlier, because Thakral yesterday announced the launch of an IPO of GemLife Communities, which is an Australian over-50s lifestyle resort operator, to raise up to 750 million Aussie dollars, around 630 million Sing dollars. Now, why are we talking about this? This is because Thakral holds a 31.7% effective interest in GemLife. I know you don't comment on individual firms and corporate developments, but generally speaking, what are the motivations for seeking an IPO in this very uncertain market environment?
I think there's been a few factors behind this decision to do so. One would be demographic tailwinds. Mm-hmm. So there's been a rising demand for rising 50s lifestyle in Australia itself. It also allows them to unlock value. So that will allows them to benefit from valuation uplift and liquidity from this particular listing as well. Mm-hmm. While there is concerns about the current market volatility, but there is also, there could be another school of thought where they could be seek to actually do a listing before the volatility increases further. So issuers may then try to tap on public markets first in case of any potential interest rate or geopolitical issues that may escalate further from there. Lastly, this sector is seen as defensive, and it also attracts yield-seeking investors itself.
I see. Well, if we could stay in Singapore, Kenneth, private sector economists, their forecasts for Singapore's full year 2025 growth and inflation have fallen sharply as compared with the previous quarter. So if we go by the latest quarterly survey of professional forecasters published by the MAS today, the median growth forecast fell from 2.6% previously to 1.7%. Now, the forecast reading was also dragged down by an anticipated manufacturing contraction. So what do you make of the latest forecast, and really what can this tell us about the outlook of SGX listed and perhaps Singapore-based manufacturers?
Well, when all the surveyed economists, 100% highlighted geopolitical tensions as a key risk, right? Including the Israel-Iran conflict as well as the US-China trade risk. Is definitely, this is one of the key concerns of the downsides as well. It also reflects cautious sentiment as well as manufacturing contraction amid global demand weaknesses as well. However, on the flip side itself, the survey also includes, easing trade tensions, 87.5%, stronger external demand of 43.8%, and China tech recovery 31.3% of that may potential upside from there. Yeah. So while SGX listed manufacturers may have some near-term headwinds, but they could benefit if the trade stabilize or if the tech cycle recovers from there.
I see. Well, if you're just tuning in, we're now in conversation with Kenneth Goh, Director of Private Wealth Management at UOB Kay Hian. Well, across the region, Kenneth, I know you are very focused on the Chinese markets, so let's talk about that. China, it is testing the limits of what its consumer stimulus can accomplish by subsidizing purchases of selected goods. Now, that fueled a shopping spree that boosted retail sales growth to the strongest in more than a year. But that being said, it threatens to overwhelm authorities even in the richest regions because you are subsidizing. Question then, how far can such moves bolster the Chinese economy, given how some provinces they have been forced to suspend the granting of subsidies or receiving applications for the handouts?
So China's retail numbers has looked very strong, boosted by these consumer subsidies. Like, for example, sales of categories such as home appliances, electronics, for example, have jumped 50% year on year. And however, there's been a flip side to this jump as well. For example, certain provinces, like for example, Henan and Chongqing, has paused their subsidy programs because the funds have dried up already. Even wealthier regions, like for example, Guangdong province, have already announced rationing or capping applications from there. So as of this present moment, while the stimulus does give a short-term lift, it is not a long-term fix from there. I think structural reforms such as boosting household income and private sector confidence are still needed to sustain growth from there.
And a curious question as well, and an impromptu question. Sure. Do you think we are already seeing improvements with regards to consumer sentiment and retail spending within China without the other stimulus measures?
I think it really depends on if they are remove away the stimulus from there, then we can see from there. As long as it's still present, it is really hard to say for sure. I think the geopolitical concerns that affect us in Singapore as well as Southeast Asia does impact China as well from there.
Okay, and Kenneth, let's talk about JD.com because its founder, Richard Liu, has vowed to speed up an overseas foray and compete with Meituan in new arenas from food delivery to travel. That is his boldest attempt yet to revive JD.com that has languished since this 2020 government crackdown. Now, the question is, going forward, can we expect more of such announcements by Chinese big techs, given the current stance the Chinese government is taking towards the tech sector?
Well, animal spirits have somewhat returned because, Richard Liu, the CEO of JD.com, has actually, has been quoted in a dinner in other tech CEOs with where he spoke to Wan Xing, CEO of Meituan, that retail doesn't just belong to me or JD.com. Anyone can do it. I have no right to complain. The same goes for food delivery as well. That animal spirits are dead. This was public and it was widely quoted from there. Bloomberg also reported that he actually personally delivered food to customers in Beijing itself, which was really a very bold move, which is, you almost never see that in among the China billionaires. And this is, I guess, is part of a wider push to revitalize the company. It has been struggling a little bit ever since the tech crackdown. While with the policy sentiment improving, other tech giants may follow suit from there. They may actually start to go into other sectors that each of them have been dominant in, like, for example, food, travel, or in doubling down on overseas growth. So, like the case of how Pinduoduo has been doing it with Temu, for example. Yeah. So, it's a sign that the animal spirits are coming back, and that's something that fierce competition is coming back to the sector.
Fierce competition coming back. I wonder if Alibaba's Jack Ma will, come back to the fore.
Oh, yes. He's one of the most influential leaders around there.
Yeah, and finally, before we let you go, Kenneth, we must get your take on this because U.S. Fed officials, they're widely expected to leave rates unchanged for the fourth straight meeting that ends overnight. They're also expected to reiterate that they want more clarity on the economic impact of a wide array of government policy changes before adjusting borrowing costs. What are you expecting on this front in terms of rates and also in terms of the Fed's dot plot?
I think the key phase that was quoted quite a lot has been uncertainty, right? So, so despite Trump's tariffs, and cost to cut rates, the data doesn't show a lot of inflation cooling. It's just 2.1%, just slightly above the target anyway. And growth forecasts have been trimmed slightly, so nobody's expecting like the rate cut to be, the markets don't expect the cuts to only happen somewhere around in September itself. The dot plot, right, they expect it to be somewhere around, updated dot plot projections could shift. So it shows maybe possibly one rate cut in 2025 instead of two. But then again, because we live in such a very dynamic environment itself, so things are expected to change very rapidly as well.
So again, we must use back the phrase that the Fed always use. They always use what's that? Data dependent.
Yes, that's right.
Data dependent, okay.
Which is also hedged by the word uncertainty.
Okay, so data dependency, uncertainty, we shall see how the numbers look like. Thanks so much for the insights, Kenneth. Kenneth Goh, Director, Private Wealth Management at UOB Kay Hian. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.